If you're a residential real estate agent earning $200,000 a year and you want to grow your passive income, this show's for you. Learn the secrets other agents use and hear from experts in our field in order to guide you along your journey to investing in assets like apartment communities so that you can turn your commissions into cash flow. I'm Randall McLeod. Let's go, baby. All right, welcome back. We are agents. We're building cash flow. Let's go. On today's episode, we are talking about fund managers and the important role they play in executing real estate transactions and running a fund. So we've gone through this series and we've talked about investing in funds, making sure that your goals are aligned. And then we talked about the different types of structures of funds, you know, the REITs, the LLC and the LP, limited partners. So go back and listen to those episodes if you haven't already. We're continuing today. We're going to talk about the fund manager and the integral role they play in executing investments, right? So the fund manager is an essential part of a real estate investment fund. There's no way around it, right? They're the ones that are crafting the vision, crafting the investment thesis as to why certain assets are acquired, when they're exited and that sort of thing. So that is the number one reason, right? The investment strategy. They are responsible for creating and crafting that. So you don't want to invest in a fund where the investment strategy is buying multifamily apartment complexes that are producing cash flow on a consistent basis. And then they take a left-hand turn and they're buying a land development deal for neighborhood development, right? For single family homes. Like that's a problem, right? So you're investing in that fund manager's vision, essentially. So that's one thing that they are implementing in place. The strategy, making sure that the due diligence is done on all the properties. They're making the investment decisions, and they're responsible for acquiring the assets that meet the investment criteria. Number two, the fund manager is an asset manager. Okay, so they're responsible for the day-to-day operations of each of the assets that they acquire. And they may have somebody on their team that does that, but it may be them as well. So if there's four property portfolio in a single fund, they're looking at four properties, right? Managing that property manager, making sure that they are executing the business plan that they have in place for each one of those assets so that the rents are increasing or the CapEx budget is being spent in the right way. And the property is going to have the returns that specific property needs in order to meet the fund's overall goals, right? That's the second one. Third, they are responsible for the financial management, right? So the fund manager is creating and managing the budget, making sure that there's capital reserves there for the fund. So if anything happens, that the money is available, making sure that the cash flows are being paid out and distributed to the limited partners or the members, depending on how you have it structured. So it's huge, right? The financial management side of $10 million, $20 million fund is almost a full-time job, right? It's just managing that entire thing. They're also responsible for compliance. So the SEC, when you're setting up a fund and you're going through distributing money to investors, there's a lot of compliance that goes into that. And so the fund manager is responsible for making sure that the entire fund, all the investors, all the different types of investments are all compliant with the SEC, especially if you have an exemption that allows you to not have to go and be fully registered. So that's their job. Next would be investor relations. So again, say it's a $20 million fund. You've got 150 investors all invested into this fund. That's a lot of people that you're talking to on an ongoing basis, consistently updating them on their investment, right? So it's just a full-time gig to take all the information from all the properties that are being managed and disseminate that along with the distributions and the individual investors' dollars and communicate that to everybody. All the updates at the properties, making sure that everybody knows what's happening, that sort of thing. It's all part of investor relations. Fund manager also determines the exit strategy. So it could be that a property hits its investment pro forma returns in year 2 out of the 5-year hold for that specific property in the fund. Okay, so now it's a decision process. Are we going to take a win and return some capital to our investors, or are we going to take a win and then reinvest that money into a new deal? What are we going to do at that time? So the decision needs to be made, and that's the fund manager's job. It's also the risk management side of it kind of plays into that exit strategy conversation as well. So that's another responsibility, making sure that preservation of capital is number one. And I'm kind of speaking for myself here, but preservation of capital is number one. The returns, obviously, you want to be hitting those. And so what is it that we have to do on the fund management side in order to mitigate risk? So again, in that scenario that I just gave you, if we see in 2022 that interest rates are starting to kick up and it's going to be difficult for buyers to buy properties, and yet we have a premium price that we're being offered on our property in year 2 of our 5-year pro forma that we're trying to execute on, then we want to sell that and liquidate, return capital to investors, show a win, de-risk the portfolio, right? And so that's a great way, one risk management strategy. Another one would be buying, 4 different assets. That's just by itself gives you diversification of risk across 4 different assets rather than just being invested in one. And then how those play with each other. If you're doing it all in one market, can you use the same property management company, get a decreased cost? So there's a lot of ways that you can reduce the risk in these deals. And so that's the fund manager's job. Another job is just simply reporting. So having typically like in a fund, we have a third party management company who has an entire back-end investor portal, and they allow the investor to go in at any time and look at how an investment is performing, print reports, get that sort of thing. But on an ongoing basis, what is the communication cadence like from the fund manager? That's their job. They have to be communicating with you so that you know what is happening throughout the investment lifecycle. Just another gig that they're working on. And then 9 is a fund performance. Again, I'd consider that being part of a reporting issue. You need to, as a fund manager, be creating value for investors and achieving the results that we have promised that we would hit, right? And so how you do that and making sure that the fund is performing throughout the life cycle of the deal. Again, it could be exiting soon. It could be holding a property a little bit longer to make sure that the market cycle changes. Whatever that is, that's your job. Another key thing, and probably the last one, just having a succession plan. So if a fund is an evergreen fund, like we are creating right now, it can last forever. It's not necessarily a REIT. It's still private, but you can invest your dollars and you can continually reinvest into that deal. And so an evergreen fund essentially is set up to where once an asset sells, the investor has the opportunity to say, yeah, I'm going to call my capital back, go ahead and return my capital, and I'm going to move on to another deal, or they can reinvest. And so reinvesting in the deal, you're going to exponentially grow and as compound your money as you're reinvesting into the subsequent deals that we're going into. And so the point of saying all of that is that having a succession plan for a fund that may outlive you is really important. And that's one of the jobs, is just to find a successor and make sure that there's something in place when that fund goes on longer than you are. So as you can see, there are a lot of roles and responsibilities that a fund manager has to do throughout the life cycle of a fund. And that could just be one fund. So again, make sure your goals are aligned. You've got the different types of structures. And I highlighted very quickly, so maybe I'll throw another segment in here about the different fund terms and types of funds that you can invest in, not just the structures of funds that we did in segment 2. And now you've got the fund manager. So yeah, we're going to throw one more segment in on evergreen funds and different types of funds, just to give you a high level view on that as well. And then we're going to finish up with the fee structure as well. So anytime you're investing in a fund or syndication, there are fees associated with it. So we'll do that on a subsequent episode as well. As always, thanks for joining me. Great to have you on today, and we'll see you on the next episode. Bye-bye.
Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.